Welcome to the Value Builder Podcast, where we focus on real estate with a value-add mindset. Real strategies, real operators, real outcomes. Let's dive in.
All right. Welcome, Value Builder community. Today episode is different. I'm sitting down here with Darren Smith. We met probably about 5 years ago on the river. Danny Newbury organized, I remember, with Gavin, and he is in commercial real estate, coincidentally very heavily focused on industrial. And we stayed in touch from that point, and we collaborated quite often, and we were in a commercial academy, build a great relationship and friendship. And right now we're actually cooking a deal together in Palmyra, Pennsylvania. But today we'll be talking about one of the deals that Darren is about to close. This is not a capital raise pitch. This is just really just bringing as much value as possible to you guys and to Darren as well. And he's going to show I would say a really, I don't want to call simple, but very clear playbook of some not crazy heavy lift, but a value add and a very clear path how to increase the value. I'm really excited to talk about it, Darren. And at the end of this episode, someone who is looking at the box how to increase the value on industrial property or value add property, this is going to be a very good exercise, and it's going to create a lot of clarity for you. So with that, Darren, welcome to the show. And maybe before we start, maybe we can just briefly introduce yourself, and tell us how you end up in commercial real estate, just kind of, so we can get a good sense about yourself.
Sure. Yeah. Thanks for having me again on Saul. It's fantastic. Like most of your listeners probably start out in the residential space. I did as well back in the 2000s, did some flipping, a little bit of wholesaling, lost my shirt in the crash, but fortunately I had a computer job at the time. So kind of stayed on with that, but picked it back up again in about 2011, 12. Built a big wholesaling business and wholesaled hundreds of houses. And then about 7-8 years ago, you mentioned Danny. He was a friend of a friend and saw him doing commercial real estate stuff. And that just kind of caught the bug. And so I guess about 7-8 years ago, I made that official jump. There was about 2-3 years overlap where I was kind of winding my wholesaling business and flipping business down. I sold that to my employees for $1. And I've just done industrial ever since. And it's been great.
Same thing I did. Wow, I did not even know about it. That's how your exit was. My exit was very similar from wholesale. Awesome.
That's it. But I'd love to dive into this deal that I'm closing here at the end of the month. As soon as we get the appraisal back, everything's looking great. But yeah, does that sound good?
Yeah, let's go. If you can pull it up on the screen and just give us your highlights and show us your vision and tell
Sure.
us how the deal pencil out right now, and what's gonna be in your hands in 3 to 5 years, and just kind of walk us through.
Happy to do that. So here I'm going to share my screen and I'll bring up the offering memorandum for this. Here's the problem. It's a beautiful building. It's 41,250 square feet on the, counting the base and the mezzanine area. And I highlight that separately, that the second floor, because the base of the building is only 38,450, I believe. And so where that comes into play is just one of the ways I was able to add value to this building. So I'll back up a little bit and say the first way you always try and add value is you're trying to add value to the seller. You're trying to add, you learn as much as you can about the owner of the property, what their situation is. In this case, the owner of this building, he built this for himself back in 2008, I believe. And he's been running his business out of here. He's looking to downsize.
Now, Darren, just to get a little bit more clarity, this is industrial one-story with a 30% of the building has a mezzanine second floor, or is like a true second floor with separate entrance?
Yeah, no, probably about about 3,000, little under 3,000 square feet of mezzanine on the second floor. In fact, it's this corner here with where the brick is. And I'll finish that part of it. The reason that was a difference is when I first was underwriting this building and coming up with a price per square foot and what I could rent this thing for, I was including that mezzanine space. And that can be a little bit of a gray area on how much you're able to charge for a building. When you get to second floor, even though this is Class A, it's beautiful second floor office in there, you're not going to get the same rents. So what I did was we negotiated a sale price, purchase price for this building originally. And after, some research later on, I found out, you're not able to get that same rent for that second floor. So I went back to the seller and I said, "Hey, look, we're going to do the same rent that you're paying," because he was going to pay, the $10.25 a square foot was going to be his leaseback rate. But we were only going to charge him rent based on the first floor. And then I also reduced my purchase price on the building by about $200,000. I think it was maybe about, it was over $200,000 because I reduced the square footage that I was paying for. So he reduced his rent. That helped me and him happy, but I also reduced the purchase price to compensate, for that.
Yeah. So pretty much, you just eliminated from the calculation mezzanine floor as a square footage, and you're right now paying only on a floor plate, right?
That's exactly it. I'm only paying on the floor plate. Whereas when I advertise it, and you can see in my operating memorandum here, it does say 41,250. It doesn't actually include that in. So that was one of the ways, again, adding value. You're just trying to find ways to get the right price for things. The other way that I went back and I actually did 2 retrades on this, and I don't like to retrade. I mean, I neither of these that I go in intentionally saying, "Hey, I'm going to get a lower price." When I offered the original price, it was around four.
They call it this is a price adjustments on findings. This
Yes,
is not a retrade yet.
it's not a retrade. Exactly. It's we found out things that were different than when we went in. And so once we know that, then we have to go back and make those adjustments. The other adjustment that was made on this one was the tenant, since it's a sale leaseback, even though he's run the business a long time, the financials are good. He has plenty of cash in the bank. He has over $3 million of paid for inventory in the building. It's trailer parts. P&L from 2024 showed over about a $250,000 loss for the year. And he's also going to lose money in 2025. Now, that didn't concern me because I'm renting this building back to him at significantly below market rates. He's paying about 10.25, and the market on this is closer to 14. So I'm comfortable, even if he doesn't make it, like I want to release this as soon as possible, to be honest. But it made banks nervous. And so because that made banks nervous, getting the financing was a bit harder. And we end up having to put down a full year's worth of payments in an escrow account that the bank holds until we get this property released, which is going to be in 3 years. So that came out to $210,000. So we also were not able to get an 80% financing, which I had in my offer. We only got 75%. So you had those two numbers together, and it was over $450,000. So what we did was we went back to the seller and we said, "Look, we're able to come up with another $250,000 to make up for that 5% difference on the bank loan that they won't give us. But that escrow account, that escrow amount that they wanted to put in there, that 210, hey, we need you to do a seller credit in order to make up for that so they can put in there. We can't come up with that whole amount." And so that was another negotiation. So we took the price property down from about 4.5 million down to, I think it ended up being 4,023,000 is our final purchase price on this one, which, obviously makes the numbers work a lot better for us and for our investors that we have in this property.
Makes sense. So you went for the full credit on escrow, not seller financing portion, right? Like, because a lot of times I would think maybe I should ask from the seller to carry that portion, but you just went for the straight credit, which is great.
I did. And seller financing, I've added a lot of value for people over the years, doing that. There's a ton of tax savings that can be beneficial for sellers in that. I bought another property last year at 98% seller financed. And it worked great for everybody. He paid almost no taxes that year. Obviously, that's great for me getting in lighter and being able to add value. In this case, there were partners in both the business and in the property, and he wanted as clean a sale as possible. He wanted basically no seller financing, so that he had to deal with it. He just wanted it done this year in 2025, and that was it. Because we did discuss seller financing earlier on. It wasn't going to be an option on this one.
So on the map, just like on the rough map side, your lease back is at a $10 a foot, right?
Yeah, $10.25 a square foot.
And market is where, roughly?
Very conservatively, it's at 13, but more realistically, buildings like this are going in the $15 range. And so in 3 years, if we can get those increases, just standard 3%, it might be at $15, $16 when we go to release. So the going in cap rate, we were only about an 8.5 to start on this one. It's not not that great of a return. Like if I was just to buy this fully baked, and I was saying I wouldn't buy a property that was an 8.5 cap normally if there was no way to add value. But knowing that in a couple of years we can take this beautiful building, and it's spectacular. I will say it is the nicest built building that I've ever purchased for myself as an investment before.
Yeah, definitely looks like really beautiful building. I'm looking right now one on Class A, which is north of $70 a foot, with mezzanine floor, and also going in cap rate is fairly low, but in terms of quality of construction is just, yeah, I can't pass it. I'm sending an offer.
Yeah, that's it. Sometimes it's just too good to on nice of a building, and you're willing to take a little bit less of a return on some of these properties when they are so nice. I put an offer in on another property this morning, and my offer from a cap rate and all that is significantly lower because it was built in the 1960s. It has a ton of auto mechanic type tenants in there. The rent roll is terrible, but I love it because it's full service gross leases. There is a lot of deferred maintenance. There's a lot of ways to add value. There's probably an extra 2 to 3 acres of land on the property. All these things that the current owner, you can tell they put no effort into this for probably 20 years. It's just kind of run what it is. So that's my normal type of value add, where you go and you have to put a ton of work in. This one isn't value add. There's no work to do on the property. I'm literally spending $0. However, the value add was on making it beneficial to the seller, meeting his timeline with the sale-leaseback, and then just also getting it at a right price for his rent, getting the rent to work for him on that dollar amount. And then that gave me the upside once he exits the building.
When are you closing that one?
That one closes by the end of the month. We get the appraisal back on the 16th, and as soon as that comes in, we can schedule the closing date.
It's nice. So for the listeners who may be starting to dabble in value add, if we just, not diving in granular in performance, but I believe there are two avenues, the way I'm hearing, right? One avenue is that you keep renting to existing tenant, and you probably extend the lease to the same tenant, and you refinance that, and I'm looking to hear from you on how that looks like in a dollar amounts in the value. Another avenue, probably actually he leaves and you lease up for the higher amount. Do you have those like broad strokes of where the value is going to end up, in those two scenarios? Every week, I read hundreds of commercial real estate articles from across the U.S. and around the world. I connect the signals, break down the Fed moves, and share real case studies, not theory, from my 2 decades of real estate experience and actively doing deals right now. My team and I spend 15 plus hours on a weekly basis and deliver this to you for free. You can read it in 5 minutes. So every Sunday at 9:07 a.m., you'll get major commercial real estate news that matters, one Fed insights that matters, one deep dive case study from me or one of our operators who already made the mistakes, so you don't have to. Thousands of commercial real estate operators and investors read this newsletter, especially in the value add space. And don't take my word for it. Check out hundreds of reader testimonials online. Plus, when you subscribe, you get instant access to a Perform underwriting tool, the same one we use every single day to underwrite value add deals. Now, this is not for you if you're looking to get rich quick schemes, or if you're looking for theory and hallucinations, not real numbers, or you're not serious about commercial real estate. But if you want real tactics, real deals, real results, no bait and switch, go to joinvaluebuilder.com and subscribe for free. And see you there, guys.
Yeah. So in this case, it is absolutely the value add on this is getting a new tenant in. So going in, we're about 8.5 cap on the release. I think we're going to be at least at 11.5 to a 12 cap at that point.
On basis.
On basis at the 3-point based on our purchase price. In fact, that's probably, I haven't even recalculated since we got the $200,000 credit. So that adds about another 5% to that. So it'll be about 12.5 cap. That's the one way of adding value, is just kind of re-tenanting. Usually though, that takes a lot more expense. And so you're putting a lot of money in a building. So most buildings I buy, when there's value add, especially if it's multi-tenant, there's a mix of some tenants just stay in and you kind of get their rents up, and vast majority of the time, I don't bring current tenants usually to market. There's nothing wrong with doing that, but I'll try and get somewhere in the middle. If they're $5 and market is $9, hey, maybe we do something at $7.
Yeah, exactly.
I like keeping them in there. But if I have to, if they say, hey, we're not staying, that's when I go in, I put some money in the place, I fix it up, make it look nice. And then we go absolutely right to the $9, whatever the market's bringing at that place.
So on the dollar, just as a deal perspective, so you're buying at, you said $4 million right now? What's the purchase price?
Yeah, this building will be just under $100.
So about $4 million, right? So let's say you have 3 year lease, right?
It's a 3-year lease. Yes.
So within 3 years, we'll release it, call it what? 13, 14.
Yeah.
Okay,
Very
so
conservatively. Yes.
yeah, so what the value will be at that time? Let's say at 7.5 cap roughly, or 8 cap.
Yeah. I have that on my offer memorandum. I probably should know what that is. But it was
I'm putting you on the spot. I'm sorry.
well. What I knew, the reason I knew it was a good investment because I know in the 3 years when we release that out, and then we do have limited partners. There was
Hmm.
$1.3 million raised on this deal, and they're getting a great IRR on their money as well. And what getting it to the market rents, and I believe we underwrote this at $13. So
Hmm.
our underwriting at the 3-year point for
Hmm.
$13 still allowed us at a 75% loan to value at that point to completely pay off the $1.3 million that is invested by the LPs. At that point, they will get they'll have 100% of their money back. They
Capital
will
back.
they will receive a preferred return for the 3-year period. So they're getting 8% cash for 3 years. They get all their money back in year 3, and then they still own their percentage. In this case, they're owning 40% of the property. They will still own 40% and have no money in the deal at that point.
Yeah, that makes sense for sure. No, so yeah, and so your vision is not to sell, refinance, return the capital back, and keep cash flowing
Yeah.
the property.
That's exactly it. And I did just look it up. I see the pro forma for 5-year. I
Hmm.
don't have it on the 3, but that would be with the new rent, and it's just over $6 million at year 5, and we're
six
buying it
million bucks. Yeah,
at $4 million right
without
now.
really capital expenditures. So $2 million upside. Without that's definitely a great deal because you are putting on equity side a little over a million, about a million.
Like, yeah, 1.3 million is the equity going into this one. And again, there's a bit of an overraise on that, so you always have to have reserves. You want to make sure that you're covered. Even though, again, this building, we've had inspections, we've had everything checked out. It's fully sprinkled. It really is as Class A as you can get. So there's nothing to do. It's in great shape.
And what about location? What is that located in terms of demographics, incomes? How far is that from major city?
Yeah, that's always the first question. Location is more important than really anything else you're doing. And this one, it's a mile off of Route 95. It's 15 minutes from Wilmington, Delaware. It's in a
Hmm.
town called Newark, Delaware.
Yep.
So great logistics hub. There's a ton going on there, and I love being close to highways. It's surrounded by a bunch of other industrial right in that strip. Then, but I also like about especially when I get into smaller bay. This one doesn't matter quite as much because it's a little bit larger. When you need a smaller bay, I like to be near houses, so near rooftops. I talk about that one that I put the offer in this morning. It's a bunch of small units, and if
Hmm.
you drive around, it's actually a bunch of oil storage tanks. So it's definitely an industrial area. But within 3 minutes, there's neighborhoods all around, and I love that because those are the types of tenants and those nice middle class houses. They want to rent small bay. They want those 2,000-3,000 square foot spaces for their businesses.
Hmm.
So really matters a lot there. But yeah, this one I love the location. The demographics are great. Well over 100,000, household income, ton of job growth and population growth, all the stuff you're looking for.
So, do you have also a possibility, let's say, that if you want to push the rents even higher, are you envisioning maybe at some point even to chop it off the building in a small base, or it's not conducive for that?
And that's a great question as well. This one is not as conducive. I love that option. That would be the cherry on the top is
Hmm.
if it was more demisable to be able to split into small spaces. It could be done, but because of the layout of where the office is, where
Hmm.
the loading
Yeah.
dock doors are, and then just the parking access, it would be a bit cumbersome. So I'd say at most I could probably split this into 2 because you can share office even if the office is on one side. There's
Yeah.
way you can demise that up, but it just makes it a little bit more
Yeah,
cumbersome.
it's good enough. It's good enough. And also another thing, which I think we should look more and more into this, the gap between construction and basis, what's going to cost to build this. I just got a quote from Arcos. It's $130 a foot for 20-foot clear in Ohio. And that's without land cost, right? No, so that you add another land cost, maybe 15, $30. So really just to replace this type of building, if it's really class A, a new building, I mean, with the land 150, 160, 180, right? No, just without land, it's going to be like bare bones, $130.
Yeah, at least. And I ran the numbers in this area, based on land, and this being again such this is 32-foot clears. Everything is fully sprinkled. There's a ton of power in this
Hmm.
building. The office is Class A. This was actually like bare bones. You're looking 200 a foot and probably more like $250 a square foot to build this exact property. And I'm buying it at 100.
At $100, you're buying half cost. Yeah, for sure. No, so if there is demand, you're just gonna be someone who is gonna be able to have unfair advantage to have full occupancy because you can drop 20%, and they can't. They can. You're always able to drop 20, 30%. You still can return and service the debt and pay good return to investors. No one other guy who built at those costs, they can.
That's one of the calculations I always run when I'm looking at a building is what am I renting it for now? And what's the price per square foot that I could rent it for and still cover all my debt service and my expenses, at least on a break even. And, the lower I can get that number compared to where I'm at now. In this case, I'm at 1025. I think on this building, it was somewhere around like 850, a little bit tighter than I'm actually normally because again, I'm renting at a low basis or I'm renting at a low rate on the lease back. But compared to market rents, I'm $4, $5 below market is where I could be and still pay my bills. And
Hmm.
you're people listening that always want to run that. What's your worst case scenario? And can I live with that? How do I mitigate it? And can I live with that? In this case, I definitely can.
Yeah, yeah, totally makes sense. Absolutely. That was a great example, and I love talking about deals. And I'm pretty sure many of our listeners will find a lot of value from this. This is a great example of adding value, finding the spread between existing rents and how much you're going to be able to lease it in the future. By the way, you found this deal through broker or it was direct to seller? How did you build a relationship with the seller?
Yeah, almost all of my deals are through my own marketing. I do mailers, so those auto pen mailers.
Hmm.
I carried that over from the residential marketing
Yeah.
space, but I do love working with brokers as well. I'm under contract on another property right now. That was a broker I've been talking with for 3 years. Actually, this
Hmm.
thing's been listed in and out of contract, and so you just keep those relationships. Put them in your CRM. Follow up every couple of months. Most stuff doesn't come to fruition. Somebody closes it or goes another direction, but the ones that do, they can be fantastic. I found the longer that I'm talking with owners, usually the better I'm able to make something out work for me, but also work for them, to be honest, because the longer you talk to somebody, the more you get to learn their situation, the more you learn about them and how to help them the best. And then usually life happens enough that now they're like, okay, now I'm really ready to do
Hmm.
something. And you've built that relationship, so they're ready to move forward with you.
So in this particular situation, how long did you talk to the seller until he got to the contract?
This was actually one of the faster ones. I think this was maybe like 3-4 months of talking until we signed a contract. And so that's actually fast. I'm more of like 9 to 12 months is probably more of an average. And I've had, like I said, 2 and 3 year deals. In fact, I have one right now. We're very close. I've been talking to him for 3 years. We finally met. Actually, it took 3 years to even meet. This is dozens of phone calls, but he finally was ready. We met. We think we're there, but his accountant and his attorney talked him into seeing what the market would do to wait another year. He's like, don't do it. They said, don't do anything yet. Wait and see if things improve. And I feel for him. My heart goes out because, he's 74 years old and he really wants this to move on. He wants some clarity. He doesn't want his wife having to deal with this. He's not in the greatest of health. And we found a perfect solution for tax basis because he has basically a zero basis in the building. We kind of like all the numbers work, but there's still just there's a lot of emotional piece in some of these things. And I could tell that, letting go of it right now was still a challenge, for him, just that because he's owned it for
Yeah.
40 years. His life's invested in this. And then so when his accountant and his attorney said, well, hopefully things will improve in the market, wait another year. I think he kind of latched on a little bit, which again, I respect him. I thanked him very much and we're still going to stay in touch. He's like, hey, if you can just call me every couple of months and let's stay in touch. I really, what you've done for me and we'll make something work out. And we'll to be continued, but I think it'll work out.
Yeah, that's great, man. That's absolutely. This is the long game, and when you said for 3 to 4 months, I think for many people will be, wow, that's long. No, 3 4 months actually, it's not long. It's not long. We're not talking about thousands of conversations. There is always maybe like 30, 40 circling, maybe, right? And some of them bubble up, what I call them, once in a while. This is great, great, great advice for everyone. Hey, Darren, it was great. I really appreciate for this for the sharing. I hope we're gonna get next time soon. Maybe we'll get on a Palmyra deal soon, and
Well,
because
that's a very
that deal
interesting
is keep changing every single week, right? And it's
every
getting
day.
better and better. So I love it, and I think soon we'll need to uncover the veil, what's going on over there. We'll learn so much out of it. Now, so for the folks who want to reach out to you, if you may want to take a look at your next deal, because this one is full, right?
Yes.
Yeah, this one is closing, but let's say if folks want to learn from you more or they want to look at your deals. So I know you are collaborating with a bunch of AI geeks in commercial real estate. If they want to reach out to you, where can they find you?
Yeah, best place to reach out is Darren, so Darren at solidgrowthproperties.com, and my website is the same, Solid Growth Properties as well. And yeah, we I don't raise often. I think we raised 1.3 million on this, and that was done in like 2 or 3 days. Just a couple of phone calls, to some friends and family type things. Well, actually, no family. I take that back. No family. They're all investors. They're all accredited investors, but just people that I know, like, and trust. And if your listeners are into, if they are commercial real estate investors and looking to get into AI and learn more, we have started a mastermind for that. Very informal, but man, it was super powerful yesterday, some of the stuff that we learned. So please shoot me an email and I'd be glad to get you joined in on that too.
Awesome. All right. Thank you, Darren. I really appreciate, and good luck to you, and we'll talk soon.
Sounds great.
Amazing, brother.
You've been listening to the Value Builder podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it and keep adding value. See you in the next one.